Stop scrolling, because one small IRS rule change this year could delay your refund, trigger a penalty, or cost you thousands if you file the same way you did last year, and most taxpayers won't realize it until it's too late. If you don't want the IRS to catch you off guard, hit subscribe right now because we break down tax changes in simple, no confusion language, warn you before rules change, and help you keep more of your money instead of handing it back to the government. Let me help you understand everything you need to know about filing your taxes this year in a way that's clear and easy to follow. Think of this as a friendly conversation where I'll walk you through all the important changes and what they mean for you. The tax filing season officially opened on January 26th of this year, which means the IRS started accepting tax returns about a week ago. You're filing your taxes for the year 2025, even though we're now in 2026. This can be a bit confusing at first, but think of it this way. You're always reporting what happened in the previous year. The deadline to get your taxes submitted is April 15th, 2026, which gives you a little under 3 months from now. If you need more time, you can request an extension, but remember that an extension to file is not an extension to pay any taxes you might owe. It's like asking for more time to complete paperwork, but if you owe money, that clock keeps ticking. Now, let me talk about some significant changes that could put more money in your pocket or at least reduce what you owe. The government has made several adjustments that are designed to reflect the rising cost of living and help families keep more of their hard-earned money. First, let's discuss something called the standard deduction. This is an amount of your income that the government says you don't have to pay taxes on at all. Think of it as the government saying, the first chunk of money you earn is yours to keep for basic living expenses, no questions asked. This year, that amount has increased quite a bit. If you're filing as a single person, your standard deduction is now around $15,750. For married couples filing together, it's approximately $31,500. What this means in practical terms is that if you're single and you earned $40,000 last year, you'd only pay taxes on about $24,250 of that income. The rest is protected by the standard deduction. There's also been a notable change to something called the state and local tax deduction, which people often refer to as SALT. This matters if you itemize your deductions instead of taking the standard deduction. For years, there was a cap of $10,000 on how much you could deduct for state and local taxes you paid. This year, that cap has been raised dramatically to $40,000, though this is a temporary increase. If you live in a state with high property taxes or state income taxes, this could make a meaningful difference in your tax bill. Imagine you paid $20,000 in property taxes and state income taxes combined. In previous years, you could only deduct $10,000 of that. Now you can deduct the full $20,000, which lowers your taxable income and therefore your tax bill. For those of you who have children, grandchildren, or are raising kids, the child tax credit has also increased. It's now $2,200 per qualifying child, up from $2,000 in previous years. This credit is particularly valuable because it directly reduces the amount of tax you owe, dollar for dollar. It's different from a deduction, which only reduces the income you're taxed on. If you owe $3,000 in taxes and you have one qualifying child, that child tax credit brings your tax bill down to $800. That's real money back in your pocket. Something entirely new this year involves certain types of income that many working people receive. The government has created new tax breaks for reported tip income, overtime pay, and even car loan interest. These are what tax professionals call above-the-line deductions, which means you can claim them even if you take the standard deduction. You don't have to choose between these and the standard deduction. They're recorded on updated IRS forms and schedules. If you or someone in your household works in a job where tips are common, like restaurants or hospitality, or if you regularly work overtime hours, make sure to look for these new deductions. They're specifically designed to provide relief to working Americans. Now I need to tell you about an important change that might affect how you file. The IRS had been offering a free tool called Direct File that allowed people to file their taxes directly with the government at no cost. Unfortunately, that program has been discontinued. But don't worry, there are still free options available. The IRS certifies certain tax preparation software companies to offer free filing services if your income is below a certain threshold. These are legitimate, safe options that won't cost you anything. You can find a list of these free filing options on the IRS website at irs.gov. Here's something that requires your immediate attention if you're expecting a refund. The IRS is phasing out paper refund checks. This is a significant shift from how things used to work. In the past, you could choose to have your refund mailed to you as a check, and many people preferred this because they could hold that check in their hands and deposit it when they were ready. Now, the IRS is moving almost entirely to direct deposit. What this means for you is that you absolutely must provide accurate bank account information when you file your taxes. You'll need your bank's routing number and your account number. The routing number is typically 9 digits and identifies your specific bank, while the account number identifies your specific account at that bank. You can find both of these numbers on the bottom of your checks, or you can call your bank and ask them to provide this information to you. Make sure you write these numbers down carefully and double-check them before submitting your tax return. Even one wrong digit will cause your refund to go to the wrong place or bounce back, which creates delays and headaches. I want to take a moment to talk about something very important regarding your safety and security. During tax season, scammers become extremely active, and they specifically target people who might not be as familiar with how the IRS actually operates. These criminals are getting more sophisticated every year, and they're using fear and urgency to trick people into giving away personal information or money. Here's what you need to know and remember. The IRS will never, and I mean absolutely never, initiate contact with you through email or text message about your refund, your account, or any urgent filing issues. If you get an email that says it's from the IRS demanding immediate action or threatening consequences, if you don't respond right away, it's a scam. Delete it. Don't click any links in it. Don't reply to it. The same goes for text messages. The real IRS contacts taxpayers primarily through regular postal mail. If there's a serious issue with your taxes, you'll receive a letter in your mailbox on official IRS letterhead with a contact number you can call to verify it's legitimate. These scammers are clever. They might say things like, your refund is being held due to new filing rules, or you need to verify your identity immediately, or your Social Security benefits will be suspended. They create a sense of panic because they know that when people are scared, they don't think as clearly. If you ever receive any communication that claims to be from the IRS and it seems suspicious, the safest thing to do is to contact the IRS directly using the phone number on their official website, or better yet, create or log into your IRS online account. Your online account at irs.gov is the secure way to check the actual status of your return and see any real communications from the IRS. Before you start the process of filing your taxes, there are several things you should gather and prepare. Think of this as assembling all the pieces of a puzzle before you start putting it together. You'll need all your income documents. These include W-2 forms from any employer you worked for during 2025. If you're retired and receiving Social Security, you'll have a form called an SSA 1099 that shows your Social Security income. If you received any income from freelance work, investments, retirement account withdrawals, or other sources, you'll have various 1099 forms. These might arrive in your mailbox through mid-February, so don't rush to file until you're sure you've received everything. You'll also need your adjusted gross income from last year's tax return. This is a number the IRS uses to verify your identity when you file electronically. It's like a password that proves you're really you. You can find this number on your 2024 tax return. If you can't locate your old return, you can request this information from the IRS. Make absolutely certain that all names and Social Security numbers on your tax return are correct and match exactly what's on Social Security cards. This is especially important if you got married, divorced, or legally changed your name during the year. Any mismatch between what you put on your return and what the Social Security Administration has on file will cause delays. Even something as small as having your name as Bill on your tax return when your Social Security card says William can trigger problems. Keep all supporting documentation for anything you're claiming on your taxes. If you're taking deductions for medical expenses, charitable donations, or business expenses, keep the receipts, bank statements, and records that prove these expenses. You might not need to send these to the IRS when you file, but if your return is selected for review, you'll need to provide proof. Think of these documents as the evidence that backs up what you're claiming. Setting up an online account with the IRS is one of the smartest things you can do, even if the idea of managing something online feels intimidating. This secure account allows you to check the status of your return, see when your refund has been processed, view your payment history, and access your tax records from previous years. It's like having a window into your tax information that you can check anytime. If you have a family member or trusted friend who's comfortable with computers, ask them to help you set this up. Once it's established, you can log in whenever you want to see what's happening with your taxes. Now let me share some practical tips for getting your refund as quickly as possible. The fastest way to receive your money is to file electronically and choose direct deposit. When you file a paper return, it can take weeks or even months for the IRS to process it because someone has to manually enter all that information. Electronic filing is nearly instantaneous, and your return goes directly into the IRS computer system. Combined with direct deposit, most people receive their refunds within 2 to 3 weeks of filing. Accuracy is absolutely critical. I cannot stress this enough. Every number you put on your tax return needs to be correct. If you transpose 2 digits in your social security number, spell your name differently than it appears on official documents, or make math errors in your calculations, it will slow everything down. The IRS computers automatically check your return against the information they've received from employers, banks, and other sources. If something doesn't match, your return gets flagged for manual review, and that means delays. Take your time. Double check everything. If possible, have another person review your return before you submit it, because a fresh set of eyes often catches mistakes you might have missed. Avoid filing a paper return if you possibly can. I know that for many people who aren't comfortable with computers, the idea of filling out paper forms and mailing them in feels safer and more familiar. But paper returns are becoming increasingly problematic. The IRS is dealing with a significant backlog of paper returns, and some people who filed paper returns last year waited 6 months or more for their refunds. The world is moving toward electronic systems, and the IRS is prioritizing electronic processing. If you need help filing electronically, there are free services available. Many communities have volunteer tax preparation programs specifically designed to help seniors and people with modest incomes. These volunteers are trained and certified by the IRS, and they can help you file electronically at no cost. Let me put all of this together in a way that makes sense for your situation. If you're someone who's been filing taxes for many years, you might feel like you know the routine. And you do, in many ways. But this year brings enough changes that it's worth paying extra attention. The increased standard deduction might mean you're better off taking the standard deduction even if you've itemized in the past. The new deductions for things like tip income and overtime might apply to you or your family members. The requirement for direct deposit means you need to have your banking information ready. If you've always had someone prepare your taxes for you, that's perfectly fine and might still be your best option, especially if your tax situation is complicated. But make sure whoever is helping you is aware of these new changes. Ask them specifically about the increased standard deduction, the higher SALT cap if you itemize, the new child tax credit amount if you have qualifying children, and the new deductions for tips, overtime, and car loan interest. If you're thinking about preparing your taxes yourself, either because you want to save money or because you enjoy doing it, take advantage of the free resources available. The IRS website has a lot of helpful information, including instructions for every form and schedule. Many tax preparation software programs offer free versions for people whose income is below a certain amount. These programs ask you questions in plain English and use your answers to fill out the right forms. They do the math for you and check for common errors. The most important thing is not to let anxiety or confusion prevent you from filing on time. If you need more time to gather documents or figure out your situation, file for an extension. But remember, if you think you might owe taxes, try to estimate what you owe and pay it by April 15th, even if you're extending your filing deadline. This prevents interest and penalties from accumulating. Stay alert for scams, protect your personal information, keep good records, file electronically if possible, use direct deposit for your refund, and don't hesitate to ask for help when you need it. There are people and resources available to assist you through this process. You've been paying taxes for years, and you can successfully navigate these new changes with a little preparation and attention to detail. Take it one step at a time, and remember that millions of Americans are going through this same process right alongside you.